Hey everybody, Wednesday morning, April 27, and I'm going to keep this as quickly as I can and as painless as I can. Looking here at April, okay, this is a spreadsheet that I keep for the SPX. Started the month 45.40, dropped down to 41.75.04 yesterday's lows. Like I said in the weekend video, we're in big trouble. Big trouble. Trouble has settled down now, and I'll show you a couple of reasons why this is our bottom. Our bottom is in. And what I mean by our bottom is in, I'm actually going to go out on a limb here and say this is the lows that you're going to see until we get into the fall, August, September. These are the lows that you'll see. I didn't pull the chart up, but I'm going to try and not waste your time and get it up here real quick. Anyway, we started at 45.40. We're down here to 41.75 yesterday on the lows. We made it, as you remember, last week to 45.12.94. I had that warning to get out of your longs when we saw that 45.13. Missed it by 6 cents, obviously flipped out. The bounce that we were expecting to get after that little bit of a dip there on Friday last week has obviously not taken place. We've dropped down now 8% on the month of April. We are now negative year over year. So 1 year ago today, we are down from where we were, August 26, 2021. This decline from last week, Thursday, from 45.13 is now a 7.49% drop. And what I'm seeing here overnight is massive bounces taking place. The S&P was up as much as 45. It's currently up 36. And I'll show you what I'm looking at here. Because again, this is one of those times when you've got to zoom out, and I'll pull up the explanation as to what I'm talking about here very shortly. But this is where we are on the ES, and I want you to see this. I want you to see this very clear. We knew we were going to get that dip. We got it very early in the year, expected a little bit higher, fractionally up to that 48.50 area. We didn't get it, had that sell-off. Sell-off took place. Once you took the December lows out, all gone. Here we are, January 24th. Then we got our bounce right up there to that 45.90 area. Then Russia declared war, invaded February 24th. Boom. Had your blame, okay, your reason blame, got your low. You see here how you've got your fat bottom. Your fat bottom is actually touching that 23.6 retracement. 76.4 if you draw the other way, but your very first retracement down to the COVID lows. And you see this white dashed line that I've got drawn here. And I want you to see where this is coming from so that you can understand why it's applicable as to why we needed to drop only to this spot, and why I am thinking that our bottom is in for the duration of the rest of the spring heading into summer. Here's the 3-year chart. And this line that you're touching over here is coming right off of that right there, which is the COVID high and then the September high. The September high of last year, or of 2020, which was our major, what we're all in agreement with, was our first wave, our major one wave topping. Then we had our drop there into October, or into September, bounce in October, double bottom there on October, and then Joe Biden became president, and Joe Biden had that run, like I showed everybody, of around 34%, without any major corrections that were greater than 5-6%. We had an incredible run through 2021 with ups and downs every month, volatility for everybody. Now that we got up here, everybody's starting to complain, and they're all starting to get a little bit anxious. While I'm here, you know what? I'll go ahead and I'll throw it up. I didn't want to waste your time. I'm sorry. It's this early morning and 2018. And I'm actually going to go a little bit further out because I want you to see the entire picture of this. I'm going to go out to my birthday, September 29th of 2018, and show you what this looks like, right? And here you are. This is Donald Trump's 34, 36% run off of his election, right up there into January 26th of 2018. Then he got an 11% correction very quickly over the course of 3 days. Got his bounce up here into March. March 13th was actually the day that Google reported earnings. I still remember it. And then from there, had your double bottom down back here into April, April 2nd. And as you can see there, you've got your fractionally higher lows as you start coming over here. And we just had this peaceful, slow grind upward. And then it was over here in August when we gapped up overnight and we finally took out the January highs. And that's the same view that I still see on the table for now. On the weekend, I'll show you the .com and show you how it's very possible that we don't get to new all-time highs as we're finishing off this fifth wave that we're about to begin, as we are in here. Here's the SPX. This is your daily. And again, same thing I wanted to show you here. Not so applicable that this is your June lows, but what's applicable is that this is your 23.6 retracement to the COVID lows, and you've come down to this, and on every single visit that you've come down to it, you've gone ahead and made yourself a major bounce. This is the daily that I'm looking at here, and as you can see over here, we are now getting an oversold warning on the daily. We are now oversold over here in January because we had a very aggressive drop in January. You were oversold here over in September. You got that buy divergence, and then we had that 11% rally going through October into November. So again, we're sticking with the charts. We're not going with feelings. We're not going with opinions and shit that's being thrown out there on StockTwits. This is what you have in front of you. And what you can see happening here is a little bit of a bullish wedge. What I was showing you over here on the ES, going back to the last 90, 40 days, 186, you've got the same bullish looking wedge. Right? Whatever reason that popped up. But you've got this much wider pennant formation that you're in. So you've got your upside up here around that's 45.75, and you've got your downside over here, which you've proven time and time again, and therefore should be looked at as a very strong opportunity. Here is the SPX. I'm looking at the weekly. Okay, the weekly, not quite oversold. Slight, very, very slight, very, very slight buy divergence. This is a weekly, so we're not talking about a 1 minute chart or a 5 minute chart. But what I want to come here is we're now looking at 4 consecutive down weeks. You can go back as far as you want to go back. It's up to you how far you want to go back. Here you see 3. This is October 2020, right before Joe Biden got elected. Here's September 2020. Here's your 3. Here's COVID. 1, 2, 3, 4, 5. COVID. Okay? COVID. Here we are, going back, and now we're looking at, this is the October into November, into the December 2018, 20% on the button correction where you had your 3 consecutive down weeks. What you see there is you had your 1, 2, 3. You got a doji candle here, which was the middle of October. Then you had your bottom come in there at the end of October, and you had your bounce going here into November. We already know that because of the progress of the wave that we're in currently, we're at this point down here where we are finally completing the end of the end of the end of all of the selling that's taking place, and therefore looking for our move up. If I'm going to come up here looking on a weekly, you can see here you've got your buy divergence on your weekly. You've got your higher low, but you've got your higher low over here. Lower low over here, higher low on your RSI. Go back. I'm only looking at a 5-year, and here you see 2, you see 2, you see 2. You don't. You can go back 10 years. I can go back 15 years. All right. The data is what the data is, and we're on 4 consecutive red weeks. You don't see this. You don't. So I would again not be aggressive, but obviously be looking at this as a very good buying opportunity. And I explained in the chat room yesterday on some SPX calls that are way out in July and way out of the money, and how those have made their moves just over the course of the last couple of days, how they were down at around $11 when I put out the alert in the room, and I was chatting with somebody about it. And just 2 weeks ago, they were trading at $94 when we were up there at that 4,500 level. So, opportunities are out here to go out there way, way out and take advantage of this, understanding that you've got the chart, but also understanding and having some respect for the fact of whatever kind of position that you're trading with, as far as from an account point of view. If you're trading a large account, if you're trading a small account, you've obviously got to stick very restrictive and be looking to be scaling in and scaling out of everything you can short term. Larger account, you can look much wider. Here we are, though, on the QQQ, and I'll leave you with this, where you can see here again, 1, 2, 3 bottoms, boom, boom, boom. Here's your daily. Daily, not quite oversold. You're not quite oversold on your daily. But I want you to see your bottoms, and I want you to see what's above you. What's above you here at just here, 334, this is your 23.6 retracement to the 2016 lows. Right up above that, 345.76, that's your 23.6 retracement to the December 2018 sell-off lows. And you come up here, 351, and this is your 23.6 retracement to the COVID March 2020 lows. These are all up above you, above, with the 50% retracement of the drop right here at 360.29. But again, I want you to see, not so important where we are over here with the May-June low, but where we are right now, right here, with this 318 and this 316.93. This is where these things are coming from here. That 318.17 is coming from here. Where are you? Where are you? Where are you? This is your 316.92. It's coming off of your 2002 low. And I know I can find you some here if I click, but regardless of that, let's just go in here. Here you are. I see you. There you are. That's your 318.17. That's coming off your 2008 low. These lows from that massive sell-off that you had taking place when the market completely crashed, that's where you're supporting right here. And like it or not, believe it or not, the algorithm and the computers, they're not idiots. They don't have opinions. They don't have feelings. They see these things and they look at them as value, and they turn around and they go, okay, boom, all in. So I'd be looking at this as a very strong opportunity to be getting in to a long positions, buying stocks, holding for the short term, 2 months, 3 months, 5 months, 6 months, and first proof of point, once we can get above here on this 328.84, then we get up there to that 2016 COVID, the 2016 lows, to the 23.6 retracement. Up there at that 334.64, you can see it here on the 5-day, and then we can go up here and start fighting for that 345.76 for the December of 2018 lows. But anyway, a lot of good lows down here. Very, very fast, 7% in a couple of days. A lot of guys aren't going to want to be getting involved in this. I don't blame you, because 90% of you have never been involved in a correction before, let alone in a quote-unquote bear market, which, I'm sorry, we're not in a bear market. We're not there yet. We're getting close to it, but just because the QQQ and everything is down greater than 20%, it doesn't make this a bear market. It makes it the terminology for a bear climate. All this is a sell-off. You see it there on the charts. I've shown you. You don't have to have confidence saying, okay, yeah, I'm going to go do this, but the average American spends $28,000 a year on college. Just sit back, watch it, learn from it. But if you can get involved in it, by all God's sakes, drop me a message in chat or tag me. I'm happy to give you my opinion as to what I think fits to your scenario, if I already have an understanding of you, because I've already done one-on-one calls with you. I'll see you guys in the chat room.